So, Applied Digital is back in the spotlight again today, up another 30%. That's on top of the 48% move we just saw on June 2nd. At this point, most of the market is either piling in or wondering if this is starting to feel a little too hot. Let's talk about what's really driving this second leg of the rally. Because it's not just momentum, it's a culmination of catalysts layered on top of one another. First, we're still digesting the $7 billion lease agreement with CoreWeave, which gives APLD 15 years of locked-in revenue. That's a massive win. And this isn't just any partner. CoreWeave is a NVIDIA-backed hyperscaler with deep roots in the AI infrastructure space. So when you think about the AI build-out, this is the kind of client you want to see on the books. But now, we're seeing the secondary effects of that announcement play out. Just yesterday, H.C. Wainwright bumped their price target from $7 to $12, still calling it a buy. That was followed by B. Riley's Lucas Pipes, who came out swinging with an $18 target. That's more than 80% upside from where we were yesterday, and it's giving a lot of institutional and retail investors a reason to revisit the stock. And let's be honest, the market responds to that kind of optimism. We're still seeing about 35% of the float short, and as prices keep moving higher, shorts are being forced to buy back in, creating upward pressure. It's not just retail hype. Options activity has exploded, with over $1.6 million in call volume. When call buying gets this aggressive, especially on short-dated contracts, it creates gamma exposure for market makers, forcing them to hedge by buying the underlying stock. That's what fuels parabolic moves like this. Applied Digital isn't some meme stock. It's a company that's pivoted from crypto mining to AI infrastructure. And while that pivot hasn't been perfectly smooth, it now has something to anchor the story, a long-term deal with a real AI-native client. We're also seeing renewed institutional interest, with funds like Hood River and Oasis Management recently increasing their stakes. Not all funds are buying in, but the ones that are seem to be doing so aggressively. And don't forget, the Nasdaq is in a 5-wave impulsive rally, according to Elliott Wave analysts, and the AI sector is riding that broader wave. Now let's balance the hype with some realism, because that's what we try to do here. Valuation is getting stretched. Before today's move, APLD was trading at 5.5 times net book value and 10 times sales. That's not cheap. And Guru Focus puts the fair value at $9.46, which is now below the current price. You've also got a new 39 million share offering announced today. That's dilution. Pure and simple. Add in a $200 million at the market equity program and $150 million in convertible preferreds, and you've got a business that's still very much in capital raising mode. That's necessary for growth, but it also creates a ceiling for near-term valuation. APLD also reported a non-GAAP loss of 0.08 cents last quarter, and cash reserves are down from $308 million to $100 million. This is still a company burning cash as it scales, which means execution risk is high. And then there's the macro risk: tariffs, inflation, and rising build-out costs. APLD's North Dakota data center isn't going to be cheap to finish, especially if commodity costs keep climbing. So, is APLD still a buy? It depends on your time frame and your tolerance for volatility. If you're a momentum trader, this still has legs. The short interest, the call volume, the sector narrative, all of it could drive this higher in the near term. Just know what you're signing up for. These kinds of trades require strict discipline and clear exit strategies. If you're a long-term investor, the calculus is different. The CoreWeave deal provides real cash flow visibility. That's rare in this space, but I'd want to see proof of execution, especially on margin expansion, before I'd call this a core position. There's a lot to like here, but it's not without its risks. If you believe in AI infrastructure as a long-term megatrend, APLD is putting itself in the conversation, but the recent 80% run-up may have gotten a little ahead of the fundamentals. We'll keep watching how this plays out. The coming weeks will be telling, especially as we get updates on construction milestones and any new client wins. This is a stock to keep on the radar, whether you're building a long-term AI portfolio or just looking for volatility to trade around. Let me know what you think. Are you adding APLD here, trimming, or waiting for a pullback? Drop your thoughts in the comments. And if you found this helpful, Hit like and subscribe for more grounded, fact driven investing analysis. Thanks for watching, and I'll see you in the next one.